What are over-the-counter stocks? Over-the-counter, OTC, stocks are often overlooked by mainstream investors, but they can represent unique opportunities in the stock market. One surprising fact is that OTC markets host more than 10,000 companies, many of which are smaller or international firms. Another little-known statistic is that OTC stocks have lower regulatory oversight compared to traditional exchanges like the New York Stock Exchange, NYSE, or NASDAQ, often operating with minimal public disclosure. These factors make OTC stocks both intriguing and risky for investors. OTC stocks refer to securities that are not listed on major exchanges but are traded directly between brokers. These stocks are typically from smaller, less established companies, international firms, or those that cannot meet the stringent listing requirements of the NYSE or NASDAQ. OTC trading occurs through dealer networks and does not rely on a centralized exchange. One of the key characteristics of OTC stocks is their lack of liquidity, which can lead to significant price fluctuations. Many OTC stocks are categorized as penny stocks, trading for less than $5 per share, which adds to their speculative nature. Investing in OTC stocks can offer a high potential for reward, but the associated risks are equally significant. One of the primary advantages is the opportunity to invest in companies at a very early stage. Since many OTC companies are in the early phases of growth, investors may capitalize on significant gains if the company becomes successful. Additionally, because OTC stocks are less exposed to institutional investors and large-scale traders, individual investors may have an advantage by being early to recognize growth opportunities. This also means that OTC stocks can be cheaper to acquire, allowing small investors to diversify their portfolios without significant capital outlays. However, the lack of regulatory oversight is a major downside of OTC stocks. Unlike companies listed on the NYSE or NASDAQ, OTC companies are not required to meet strict financial reporting or governance standards. This makes it difficult for investors to assess the company's financial health or business operations, increasing the likelihood of fraudulent activities. OTC markets have historically been fertile ground for pump-and-dump schemes, where stock prices are artificially inflated to lure investors, only to collapse once the promoters sell off their holdings. For those unfamiliar with the intricacies of these markets, the risks of being misled are high. Liquidity is another challenge in OTC markets. Due to the smaller number of shares being traded and the reduced investor interest, it can be difficult to buy or sell OTC stocks quickly. Investors may find themselves stuck in positions, unable to sell without accepting significant losses. The wide bid-ask spreads, where the buying price is much lower than the selling price, can further erode profits and make it difficult to realize gains. This lack of liquidity can cause severe price volatility, as even a small trade can significantly impact the stock's price. While OTC stocks may not be subject to the rigorous listing requirements of major exchanges, this also opens the door for more international companies to be traded. Many foreign firms that do not wish to go through the complex and expensive process of getting listed on major U.S. exchanges often choose to trade over the counter. This provides investors access to markets and sectors that they might not find on the NYSE or NASDAQ, potentially offering greater geographic and industry diversification. In conclusion, OTC stocks provide a double-edged sword for investors. On one hand, they offer the chance to invest in companies with high growth potential at an early stage. On the other hand, they come with heightened risks, including the possibility of fraud, low liquidity, and insufficient financial disclosure. Successful investment in OTC stocks requires thorough research, a high tolerance for risk, and a willingness to navigate an unregulated and often unpredictable market. For investors looking for high returns, OTC stocks can be tempting, but they should approach these opportunities with caution and awareness of the dangers.